Hello traders, Orlando here for Sniper Trade. And before we go into the NZD USD short trade from yesterday, I'm going to remind you how you can get our free signals. First of all, you need to go to snapthetrade.com. When you get to our landing page, don't forget to put your details here on this box to get my daily newsletter, where you're going to get the daily levels that we're trading. You're going to get technical analysis for free, and even all the promotions that we send to our subscribers. Now, after that, click on free signals and you're going to be prompted to the free signals page. Here you're going to see the list of all the brokers that have partnered with us, and all you need to do is open an account with one of the brokers on this list using the links on the page. And this is important because if you don't use the links on this page, I'm not going to be able to track you back to us, and I'm not going to be able to give you your 6 free months package. So after you open the account, just deposit the minimum on your brokerage account and email me back at orlando@snipertrade.com with your account number and broker name, and I will automatically and immediately give you a 6-month free Forex signal package. Now let's go to the charts and let's see what happened with that New Zealand dollar US dollar trade that we put on yesterday. And today we're going to review our short position on the New Zealand dollar US dollar. Now, to remind you of the actual setup, I'm going to go to the 4-hour chart and I'm going to show you what happened. We have been a very strong down move from these highs all the way up here to the lows all the way down here at around let me see, the 68.89 or the 68.90 level. Now this is the bottom of the move, and then we retrace up to these highs, to the 70 level, 0.70 level. Now this is very important because we had one very strong rejection candle, and then we had a second strong rejection candle, which means that we rejected these levels, which means that sellers were positioned at these levels, and sellers were very strongly protecting this level. So basically what we had here is a test of the 0.70 level for the first time, then a second time, then a third time, and then when we hit the fourth test, we went short just below the previous lows. Now let's go back to the hourly chart and I'm going to show you where we're at. Well, basically we went short here at this exact candle when we broke with the downside, with this previous base, which I'm going to highlight right now. When we broke with this previous base, we went short. And what happened? Where price went all the way down here and then retraced back to test the previously broken area. This is very common in breakouts, and we could have added to our position, but it doesn't make sense because it was our entry area. And now price has retraced back or has moved down even further. Our ultimate targets are at the Fibonacci extension 161.8 of this move, and the 61.8 of the entire move to the upside, which means that we calculated the retracement from the lows at around 68.90 to the 0.70 level, and we are targeting the 61.8, which is this low right here. All right, so this is our target. But what is going on here? We have to break with the previous low in order for us to break out of this range that we have been trading in. So basically we are going to be looking at this level right here, and we are going to take half of our position off at this level. All right. And the reason we are going to take half of our position at this level is because we don't know if sellers are going to come in strong and absorb all the buy orders that are placed here and then move price down to our targets. We don't know what's going to happen. And right now we are bouncing off of this trend line, which doesn't mean a lot because this level really needs to be tested, because this is where the big orders are at, and this is kind of a magnet, market magnet. So when we test these levels, we are going to move our stops to break even, and we are going to take half of our position off. And right now we are going to reduce our risk to a bare 8 pips, just below the previous low, because if we break with the previous low, we don't want to be in this trade anymore, because we have broken with this down structure. We have the first move to the downside, and then we have a swing low, a swing high, right here, a swing high, and then we have a swing low, and then we have a swing high, which means that we have a lower lows and lower highs. So price is in the down structure, and if we break with this down structure, we want to be out. And this is why we are moving our risk from 33 pips to 8 pips. So we're going to let this trade develop, and we're going to come back once we hit these levels. Hello traders, welcome back. And a little recap on our New Zealand dollar, US dollar short trade. We have hit the previous low, which were our first targets. And right now we are up about 43 pips on this trade, and we are going to take half of the position off. Okay, so we are going to take 2.5 lots off, and we are going to take those profits to the bank. And as you can see right now, we are seeing some bullish some bullish pressure build at these levels, and we are going to keep the rest of our position open, and we are locking in about 17 pips on it. We expect a little bit of bearish pressure, but as you can see, we already broke with the previous low. What we need is a close below the previous low for a nice continuation signal on the down move. So we're going to wait and see. At least we already took half of our position off and locked in some profits. Hello traders, welcome back. And well, we just got stopped out for an extra 17 pips on our New Zealand dollar US dollar trade. And remember when I was telling you about how we were going to find buyers around this zone? Well, check out this huge rejection candle. I mean, buyers tried to break with the previous low and this very thick area of support, but were unable to close below it. And buyers just pushed price up and continued to push price up and stopped us out, and price has then rallied to the 70.23 level. Well, it was kind of not a surprise for us because we were around the 0.70 level, which is a very strong psychological round number, and where we were going to find buyers. But still we managed to make 54 pips in this nice trade on a very slow moving market, so kudos to us. If you want to receive these signals right to your inbox via email or your cell phone via SMS, just go to www.snipethetrade.com and click on free signals, and you can get a 6-month free signal package. You can also join our free traders chat room where we discuss levels, we discuss setups, trade ideas, and we share charts all throughout the London and New York session. I'm going to leave you the invite below this video.